About this is one investor, George Dallas, director of corporate governance at F&C Asset Management, who also agrees with the family. George joins us from London, and Hilary Kramer, she's the founder and chief investment officer of Green Tech Research and Equity Fund. It's an equity fund that specializes in alternative energy. Good morning to the two of you. Thanks for joining me.
Thank you.
And we think that would serve both the company as well as long-term shareholders well by taking that step.
You know, I absolutely disagree with that. Rex Tillerson came in January 2006. Since then, the stock price has risen 63%. The S&P is up only 11% in that same period of time. Why try to do that to him? Because he's been able to really execute on a company that is so big, and it's like a big ship. How do you move a company that's $499 billion in market cap? And he's been able to do it.
Hilary, here's what I sense. We spoke to Neve Rockefeller just a couple weeks ago, and I know the shareholder meeting is on May 28th and this decision here. But her frustration is, hey, look competition in this space. The competition right now is spending more money on alternative research and fuels. And if you look at them right now, they've in essence announced $24 billion worth of buybacks. Take some more of the money, or the $25 billion that they have in capital sitting on the sides, and invest more of that.
Well, ExxonMobil has, their mandate has always been high return on equity. Eventually they will do that because the price of oil, although it continues to rise, their profit sharing, contract sharing abroad continues to get more expensive for them. So over time, they will do that, but it's always about capitalism, and it's better not to force a company into an area that they're not going to make money. Over time, they will. There are companies like FPL, Florida Power and Light. They went into energy. They went into waste to energy, and they've made a lot of money. It's 7% of their revenue stream. Over time, ExxonMobil will move in that direction, but let Rex Tillerson do it in his own way. And also, ExxonMobil does give a lot of money on the philanthropic side to alternative energy and green initiatives on a community level and to education, and that's more important, to train our youth to be able to enter into the alternative energy space.
All right, George, before I turn to you here, I want to ask you something.
That would serve both the company as well as long-term shareholders well by taking that step.
You know, I absolutely disagree with that. Rex Tillerson came in January 2006. Since then, the stock price has risen 63%. The S&P is up only 11% in that same period of time. Why try to
do believe over time, notwithstanding the fact that the company is an efficient operator and has managed its business as well historically, that the company would be better served by creating a bit more independence within the board through separating the roles. And we think that that could stimulate broader discussions along the lines, for example, of climate and energy and alternative energy that can serve the company and its investors well.
But so it's it's very naive. It's very naive to think that splitting up a position and causing complications within a board, all it's going to do is cause someone else to get an extra check along the way. And plus, the Rockefeller family, now they had standard